Right, Assalamualaikum warahmatullahi wabarakatuh. So this video is explaining on IFRS 138 impairment of asset. Right. So in this video, I'm going to discuss on this impairment of asset and the part that we need to discuss and which impairment of asset in detail. All right. So I know this is not first time that you heard impairment, but in this MFRS 136, it is specific on impairment and it is going to be a detailed discussion of impairment of asset. All right. So we proceed with the first introduction actually. So asset are not carried at more than a recoverable amount. All right. So by right, we need to understand what is the mean of recoverable amount. Right. So basically, what is recoverable amount? All right. So recoverable amount is actually when you have an asset, when the company invests in any asset, they expect to receive or they expect to recover the cost of investment of the asset. All right. So in general, recoverable amount, the cost of an asset can be covered, the cost of an asset can be covered either you continuing using the asset value in use, right? Or okay, the cost of an asset can be covered back, or the cost of the asset, either by continuing using the asset, you're going to get a return by using the asset, or you just sales the asset. So we call this one as fair value. When you sell the asset to the third party, you get the value and you get the amount, which is the fair value or a market value. But you need to less with the cost for you to sell the asset, like for example, agent fees or anything. So we call this one as fair value, less cost to sales, right? So recoverable amount, the cost of the asset can be recovered either by continue using the asset or sell the asset. Okay. So if you are the owner of the asset, which one you are going to choose? I don't know. But you're going to choose the higher, am I right? So basically, we are going to choose the recoverable amount, the higher of value in use or fair value, less cost to save. Remember, this is the way for us to recover back our asset, the cost to purchase the asset, right? So to recover the cost of purchase asset, we are going to continue using or we are going to sell the asset. Which one should we choose? We are going to choose the higher. Of course, not the higher, right? Okay, that's why the higher. Right. So the objective is, all right. So to prescribe account treatment for impairment of asset, the importance is to ensure the carrying amount. What is carrying amount? Carrying amount is actually cost less with accumulated depreciation. All right, of asset is not higher than recoverable amount. All right. So carrying amount is cost less accumulated depreciation. In other words, that is our cost, right? We need to make sure our cost and recoverable amount is the way for us to recover back the cost, right? So if the recoverable amount is less, something not right, am I right? So that's why carrying amount is not higher than their recoverable amount. This we need to make sure. All right. So prescribe accounting treatment for the reversal of the impairment law. What if, yeah, we thought, what if we do the impairment loss, right? What if the carrying amount is higher? So we decrease the carrying amount to the recoverable amount, and then after certain years, then the recoverable amount is increasing after that. So what treatment should we do? That is what we call as reversal of impairment loss. Yeah. So basically, the information on recoverable amount, okay, we can get through internal source or external source. I mean, the information on impairment loss. All right. So why do company do impairment loss? Company do impairment loss because of there is an indicator. Where does the indicator come from? Indicator can come from internal source or can come from external source. Indicator, petunjuk yang menyebabkan the company need to impair their asset. Alright. Impairment and revaluation are two different things. Okay, don't get confused. Impairment and revaluation are two different things. Right. So basically, this is the indicator of impairment. Remember, revaluation does not need indicator, but impairment only done when there is an indicator. Indicator can come from internal source and can come from external source, right? So the external source information, market value declined significantly more than expected. It is normal for market value to decline, but if it is a significant, then something is wrong. Changes in the technology, market or economic or legal environment which adversely affect the entity, increase in market rates which reduce the asset recoverable amount, market rates, right? So carrying amount of the net asset of the entity is more than that's its market capitalization, right? So while the internal source, obsolescence of physical damage to the asset, something wrong, the asset jatuh ke apa, right? Changes in the business operation which negatively affect the use of the asset. For example, the asset become idle, segment where the asset use is discontinued. This example, right? So economic performance of the asset is decline. Okay, right. So this is the indication from the internal source. Okay. All right, so this is the definition. All right, so a certain definition you need to know. For example, a carrying amount. What is carrying amount? Carrying amount which asset is recognized after deducting with accumulated depreciation or an accumulated impairment loss. In other words, carrying amount is equal to cost less with accumulated depreciation less with accumulated impairment loss. All right, in general, all right. So corporate asset are assets other than goodwill that contribute to the future cash flow of both cash generating unit under review and other cash generating unit. Right. So what is impairment loss? Impairment loss is the amount by which the carrying amount of an asset or cash generating unit exceed its recoverable amount. In other words, if the carrying amount more than recoverable amount, something wrong, there will be an impairment loss. How much is the impairment loss? For us to get the impairment loss, we are going to do carrying amount less with recoverable amount. Right? We are going to get impairment loss. All right. So what is value in use? Present value of the future cash flow expected to be derived from the asset or cash generating unit. In other words, value in use is calculated by the concept of present value. Remember, if we continuing using the asset are going to give us a cash flow, right? Cash inflow, right? So cash inflow we are going to receive in future. For us to bring all this future cash inflow to us now, we are going to use the concept of present value. All right. All right. So this is the measuring the recoverable amount. How do we determine recoverable amount? So recoverable amount is the higher of, as I mentioned earlier, higher of asset or cash generating unit, fair value less cost of disposal, cost to sales, and value in use. Right? So for example, the question gives you here, fair value of the machine is 40,000. The cost to sales is 4,000. So what is fair value less cost to sale? 40 less with 4 equal to 36,000. Right? Okay. So this is example. Okay, measuring the recoverable amount. So again, it is the higher of fair value less cost to sales, fair value less cost to sales, and value in use. We are going to choose the higher. In this case, which one is the higher? Fair value less cost to sales. So we are going to choose 36,000 as our recoverable amount because it is logic. Okay, again, I repeat, for us to cover the cost of the asset, it's either we sell the asset or it's either we use the asset. Okay, either two. Do you think business will choose which one, the higher or the lower? Of course, the business are going to choose the higher, right? Either way, both still can cover the cost. Should be cover the cost. But for the business, of course, they are going to go for higher profit. Higher profit is the higher of either you sales or either you continue use. All right. So this is some exercise basically. So in this exercise, basically the question gives you here fair value less cost to sales of specialized machine as at 31st December 2019 is 500,000. Right. So this is fair value less cost sale. Value in use is 450,000. Determine the recoverable amount. Again, we are going to choose the higher. Which one is the higher? 500,000 is the higher, right? So recoverable amount of the machine is 500,000. Why? Because it is the higher of fair value less cost to sales and value in use. Okay. All right. So this is the impairment loss model. Impairment loss only happen when the carrying amount is more than recoverable amount. All right. What if recoverable amount is more than carrying amount? What if the other way around? Carrying amount is less than recoverable amount. So this one, nothing happened. Nothing happened because this one is normal. Okay, this one is normal. Nothing happened. So the thing is, impairment loss only happen when carrying amount is more than recoverable amount, right? So carrying amount is cost less with accumulated depreciation less with accumulated impairment loss, while the recoverable amount is the higher of fair value less cost of sales or value in use. We are going to choose the higher between these two, all right? So this is another exercise 2. An asset has a carrying amount of 20,000, carrying amount 20,000, value in use 16,000, fair value less cost to sales is 16,500. So we know that value in use and fair value less cost to sales is for us to calculate the recoverable amount, right? So recoverable amount, we are going to choose the highest. So recoverable amount is RM 16,500. So we compare with a carrying amount, which is RM 20,000. So if it is a comparison between this amount, this is what we call as impairment loss comparison. So we are going to choose the lower. Okay, we are going to choose the lower. In this case, lower is recoverable amount. Do you notice that now CA is more than RA? CA cannot be more than RA kan? CA is the cost kan? CA kan cost. Cost mana boleh lebih daripada dia punya cover dia punya cost. If it is more, then for sure there is an impairment loss. By how much? Just minus between these two. Alright. So carrying amount is 20,000, while recoverable amount is the higher. This one lah. So that's why this one go to this one. So what is the impairment loss? The different. Why? Because carrying amount is more than recoverable amount. What if recoverable amount is higher than carrying amount? No impairment. That one is normal. Normal lah. If you have a cost, normal, the return you want to cover more than the cost, right? Higher than the cost. It is normal, right? Alright, so next is the recognition. How do we record? This one, the journal entry. Alright, so when carrying amount is more than recoverable amount, asset deemed impaired, and therefore impairment loss are going to be recognized immediately. How to recognize? Debit impairment loss, credit accumulated impairment loss. Right. So again, accumulated. The name is accumulated itself, right? So we need to put in under statement of financial position. So why this one is ARR? Asset revaluation reserve. Asset revaluation reserve only been used only if asset impact has revalued earlier. So this asset have already the ARR. So if the asset don't have any ARR, so we straight away go to statement of profit or loss. But if before this, the asset have ARR, we need to use ARR to cover this loss first, because we don't want this loss go to return earning. Because if it's go to return earning, it's going to affect the dividend payment. Dividend is for user. Remember, user don't like this, right? User don't appreciate this, right? So the impairment of a loss should be recognized as an expenses in the statement of profit or loss immediately. All right. The accounting treatment of impairment loss will depend on whether the asset has been carried at book or at cost or revalued. If it is revalued, then we can use ARR to cover it. If it is not, then it's straight away go to cost. All right. So if it is revalued, if it is at cost, then straight away go to statement of profit or loss as expenses. If it is at a fair value or revalued, you see, we have a revaluation reserve to cover for this. All right. You see, if it is revaluation reserve, this one is actually equity. Accumulated impairment loss is actually under non-current asset, which is a negative impact. So you see, none is go to statement of profit or loss. None. Right, none. So it is 9. But if it is a asset recognized cost, loss is recognized as statement of profit or loss, and it is expenses. All right. Right, so this is asset recognized at fair value. If a loss is more than revaluation reserve, then how? Okay, so if it is more, then the remaining go to loss. All right, so amount impairment impairment loss written off as ARR should not exceed the amount in which the ARR account. So any balance that cannot be written off to ARR to be charged to statement of profit or loss and comprehensive income. So for example, this one debit profit or loss. This one is the loss, which is the impairment loss, while this one is revaluation reserve. Okay, because the company have revaluation reserve before this, right? So accumulated impairment loss is the total of impairment loss. All right. Alright, so this is example of impairment. The example here, the question give you 50,000 less 30,000, you get 20,000, and recoverable amount is 16,000. We are going to choose the lower. So the lower is recoverable amount. So we are going to have impairment loss by the difference. Right, the difference is 4,000. Alright. So in other way around, in another question, okay, revalued amount is 60,000. All right. So accumulated version is 30,000. So minus we get 30,000. All right. So this is a recoverable amount. So impairment loss is 4,000. Okay. Impairment loss is 4,000. Assume the ARR is 15,000. Okay. Assume ARR is 15,000. You see, this one. Recoverable amount is 26,000. Impairment loss is 4,000. Okay. Carrying on is 30,000. Recoverable amount is 26. Impairment is 4. Right. So in this case, asset is impaired because carrying amount is more than recoverable amount. All right. So therefore, CA must be written down to RA. You see this one? This one impairment loss is 4,000, right? Recoverable amount is 26. Impairment loss is 4,000. This 4,000, how we want to cover it? We are going to cover it using ARR because we have 15,000 ARR. So we are going to cover it using ARR. So prepare the relevant journal entry. Okay, so to do a journal entry, debit impairment, credit accumulated. Debit profit or loss, credit impairment loss, right? So this one is what we call as closing journal, right? So closing journal, if you don't know, then it's okay lah. I mean, the important part is the normal journal. I mean, the normal debit, credit, debit, impairment loss, credit, accumulated. You see, this one, recognition of impairment loss, debit, impairment loss, credit, accumulated position, similar. But at the reporting date, we cannot record as impairment loss. We need to change to ARR because the question say the company have ARR to cover for it. So in other words, if you want to do a shortcut one, debit ARR, credit impairment loss. If you want to do the shortcut version, okay. All right. Amount of impairment loss written off as ARR should not exceed the amount of ARR and account. So any balance cannot be written off to ARR and charged to P&L. Again, this one is okay lah, cukup lah kan? Because 4,000 je. Kita tengok sini 4,000 cukup lah nak cover dengan ARR. Kalau lebih besar, tak boleh lah lebih besar. Kita kena jadikan dia sebahagian daripada loss sekali lagi. Right. So this is example. Okay, kalau kita tengok example ni, entity was purchased of 500,000 at the end of the year, and the land was revalued by 750,000. After knowing the land contaminated, indicator of impairment. So this contaminated is indicator of impairment of asset, and impairment test was conducted. Right at the end of the year, the fair value cost to sales is 300,000 and value in use so it's 400,000. Of course, this one we are going to choose the higher. The higher is 400,000. We are going to choose 400,000, right? So question, determine the impairment loss if any. So if we follow this question, alright, so if you follow this question, we are going to have debit line, credit asset evaluation reserve because it is increased at the first time. It is increased from 500,000. You can refer to this slide to 750,000. So it is increased by 250,000. Increased by 250,000. Okay. So to recognize the impairment loss after a certain time, when the impairment loss is when the fair value less cost is what? Okay. It's 400,000, right? So this is the recoverable amount. This is the 750,000 is the what? Carrying amount, right? So carrying amount is 750. Recoverable amount is 400,000. So if you minus, you get 350,000. So it is an impairment asset. All right. So recoverable amount is 4,000. Okay. Okay, so now the question, when to test for impairment? So to test for impairment, normally there must be a indicator. So in this case, intangible asset with indefinite useful life and not available for use annually, even though there is no indication impairment, test should be done in the same way. So this one is annually. Okay. The second one, the impairment test test was done on 1st of June 2015. Therefore, the impairment for 2015 must be done in 1st of June 2018. right? So this is another example. Goodwill acquired on business combination, test for impairment annually. Test also when there is indication that the cash generating unit is impaired. It is important that cash generating unit because they generate their own unit. So it is important for you to monitor all the assets. So to the other asset, test at each reporting date. Reporting date, which when is at the end of the accounting period. And there is an indication of impairment. Alright, yes, so right, so this is the depreciation. Okay, so after recognizing the impairment loss, any depreciation charged on the asset in the future period will be based on the new carrying amount less with residual value over the remaining useful life. The word is remaining. Remaining useful life. It's not estimated useful life anymore. It is a remaining useful life. Mean that you have to use after, okay, let's say the asset have an estimated useful life 10 years, use for years already. So the remaining useful life is 6 years. So we are going to use the remaining after we do the impairment loss. Right. So based on this part, all right. So based on this part, in this year, in the year 2002, aerospace Bernhard purchased the property as follow. Okay, so the estimated useful life of the building is 40 years. Okay, estimated useful life, this one is all. Estimated useful life for the building. This is land. Land does not depreciate like normal. The land revalued to 10,000 and building is 18,000 in 2004. Okay, so 2002, this is the purchase price, and they increased. Land is 10,000, sorry, 10 million. Building is 18 million. Okay, clear. All right. So geographical market circumstances on 2006 has rendered the property to be less valuable. So the net sales of the land is 6,000. All right, so this one is 2006, and building is 12,000 now from 10,000 to 6 million. Sorry, 6 million, and 18,000 to 12 million, 18 million to 12 million. So it is decreased. First, it is increased, and then it is decreased, right? So land is easy for us to do because land, right, so never mind. We proceed to this line. Yeah. All right, so this is basically the question, the question asked on A, B, C, and D. All right, so I just summarize back what we just see just now. Basically, on land, it is what 2002 lah. What happened is from 8 million, originally 8 million, go to RM 10 million in 2004, and go to RM uh 12 million. Oh, sorry, RM 10 million, go to RM 6 million. This one in 2006. Right, after 2 years, 2 years, and 2 years. So again, they prepare the journal entry as at 31st December 2004. And then the question asks you show the exact extract financial statement on 2004 and then 2006 and then 2006. All right. So as we can see here, okay, I just show on land first. Right. So basically on land here, as we can see here, okay, 8 to 10 increased by 2 million. 10 to 6 decreased by 4 million. Okay, clear? Right. So basically from here, okay, from here, we can see then, all right, so this one, how to record the 8 million? 8 million is the purchase. Purchase, we are not discuss here. Purchase is debit, land, credit, how you pay lah. It is either cash, you bayar guna cash. Kalau you ada Megah Holding kan, company Megah Holding banyak duit kan, dia bayar 8 million cash and dia bayar, alright. So debit, credit cash or anything lah, what account payable ke apa, ni kita tak discuss on the scope. Right. Now our discussion is on the impairment part. Right. So this one, how to record actually? The increase in 2 million. Easy. Because Now we are record on land. Land don't have any depreciation, so it is easy. So land increased value by 2 million. So we are going to debit our land because land increased by 2 million, right? So we debit lah. And land is asset, right? So credit is when it is increased, it is ARR, asset revaluation reserve by 2 million. Okay, right. So next, in 2006, what happened here is that the value of land is decreasing, right? So there is an indicator. We assume there is an indicator. It is not the revaluation, and there is an indicator. So the company do impairment test. So based on impairment test here, we can see it is decreased by 4 million. How to record decrease by this 4 million? All right, we can see that we have this ARR. So we need to eliminate this ARR. 4 million is more than ARR, right? So basically, first thing, we eliminate all this ARR. ARR record at asset revaluation reserve or revaluation reserve record at credit. So to eliminate, we put on debit side. Debit side, we have only 2 million, right? It is not enough, right? Because land credit, land decreased by 4 million. So another 2 million, where should it go? The 2 million, we should record at a statement of profit or loss as a loss or as a what we call as impairment loss. This is the impairment loss that we record in this situation. Okay, this is the impairment loss that we record in this situation. Right, done. For this question, until 2006, it is done. Alright, so now after the revaluation, how much is actually for us to do this, right? How much is actually our land? So we can record that land value originally is 8 million. Okay, 8 million less with plus with 2 million minus with 4 million, right? Minus with 4 million. So now the land value is RM 6 million. You see this one, can? So now it's tally. Done. Right. So now that is for land. Okay. Different story if we talk about building. Okay, why it is different? Building is different. Why? Because building have a depreciation. When you have a depreciation, it is different, right? So we see from the perspective of building, Now, from the perspective of building, in 2002, what happened here in 2002, actually, it is RM 16 million, okay? So go to 2004, so it become RM 18 million, okay? Then go to 2006, it become RM 12 million. All right. So building is not just like it's not as simple as land because building have a depreciation. So if you see here, if you look by this uh, information only, you can see that from 16 million to 18 million, it is increased by 2 million. From 18 to 12 million, it is decreased by 6 million. So easy for us to just look at this just like this, right? It is easy, right? So but then what we need to calculate is the amount. Okay, but we need to calculate is okay, I use a red color. Okay, so but then we need to calculate the carrying amount. All right, so we need to calculate first again how to record the 60 million. Similar lah, like this one, right? Whatever how you pay for this, you just record. So this 2 million, remember, it is increased by 2 million. First, we need to find uh increase in value, so increase in value, so increase in value, there is no impairment. So basically we just do under 2004, what we need to do is we need to increase the carrying amount. Right, so carrying amount, we need to calculate first the carrying amount. How to calculate the carrying amount? Carrying amount is actually the cost less with accumulated depreciation. Cost is how much? Cost is 60 million. Accumulated depreciation is how much? We need to calculate lah. 60 million divided by building can be used for 40 years. You can refer to the question, 40 years times with how many years? 2002 until 2004, we assume it is 2 years. So we solve this. We are going to get RM 15 million and 200,000, 15.2 million lah. All right. So now we want to increase to this one. This one is carrying amount. How much is the revaluation amount? Revaluation amount is actually, as the question mentioned, 18 million. So by this, how much it is increased? It is increased by 2.8 million. Agree, eh? So how to record this revaluation? Under revaluation, we are going to record as debit. First thing first is right. So debit building. Okay. Building increased by how much? 2 million. So debit increased 2 million. Right. So you see, this one is the increase. This one is the ARR, right? So we credit ARR by 2.8 million. So ARR increased by 2.8 million. Why it is not tally? Because there is one more that we haven't recorded, which is the accumulated depreciation. So we need to debit the accumulated depreciation. Okay, accumulated depreciation, when we record on credit side. But when we eliminate, when we do a revaluation, we need to eliminate accumulated depreciation. Accumulated depreciation is 0.8 million. You can calculate lah to prove this. So this is the first journal entry to record. Right. Then this one is 2004. Okay, how about 2006? In 2006, okay, 2006, after we, right, remember, we do this for 2 years already, right? 2 years already. So 2 years already. So we have a remaining useful life in here. The remaining useful life is 40 less 2 years is equal to 38 years. Right. So after this, we are going to calculate our depreciation based on remaining, right? So 38 years. Okay. So now again we compare, right? Because it is decreased by 6 million, right? So again we compare, we find the carrying amount. How much is carrying amount? So again we use the new value 18 million less with accumulated depreciation. Now accumulated depreciation is how to calculate 18 million divided by 38 years. Why 38 years? Because it is the remaining useful life times with from 2004, 2006, again another 2 years. All right. So we solve this. We are going to get this one is you can calculate on your own. So again, we can get 17,052,632. This is the carrying amount. How about the recoverable amount? Recoverable amount given in the question is only 12 million. So now we compare between these two, we can get that there is an impairment loss, right? The difference, right? Again, there is an impairment loss by the difference, which is 5,052,632. So now the question, how do we record the impairment loss? Okay, we know that impairment loss is 5,052,632. So it need to be put under accumulated impairment loss by 5,052,632, right? Okay, but based on the previous one, we have this ARR. So this ARR are going to cover our loss for impairment loss. So we debit our ARR. How much our ARR? All. We put all, because it is our impairment loss is more, right? So we put all impairment ARR, we put all. The remaining 5,052,632, we minus with ARR 2.8 million. The remaining go to statement of profit or loss as impairment loss. How much? If you minus this, you are going to get 2,252,632. All right. Okay. So this is how we do this example. This is how we do this example. Okay. I hope you guys can understand this. If you guys cannot understand, then just ask me on the class line. Okay. Right. So the next part is cash generating unit. What is cash generating unit? All right. So basically, cash generating unit is the smallest identifiable group of asset that generates cash inflow that are largely independent from the cash inflow from other asset or other group of asset. It is a group. It is a group. That's why cash generating unit is a group of asset. Okay. For example, here machine can generate income independently from other asset. So it is not CGU, it's not cash generating unit because it not depend on other asset. So it is not group, it is independent, right? So one only, right? But here the oil rig alone cannot generate income independently from other assets. So other assets are needed to transport oil to the processing of plant before the sales can be made. Because this one alone cannot, they need to depend on another asset. Therefore, smallest group of asset that can generate income are asset in the oil field. So in this area, the oil field, they have oil rig, they have a lorry to transport. So this is a group of cash generating unit, right? All right, so impairment loss of CGU, all right, cash generating unit, impairment loss of CGU should be allocated to reduce the carrying amount of the asset in the following order. Right, so first to goodwill allocated to the cash generating unit, and then to other asset to the unit based on prorate basis, because CGU or cash generating unit, it is not only one asset, it is a set of asset, right? Because it is a set of assets, so when there is an impairment, so we need to do based on prorate basis lah. It's not go to one asset, it's all asset are affected. Okay, imagine lah, just imagine kalau ada satu aset, senang satu aset je impairment loss. Tapi kalau ada set of asset, asset ni dengan asset ni dengan asset, tiga asset. So bila dia ada impairment loss, asset ni nak kurang berapa, asset ni nak kurang berapa, asset ni nak kurang berapa, right? So we need to do a prorate to calculate the impairment loss for each asset, right? Right, so this is example of impairment loss of a cash generating unit. We can see here the carrying amount of each carrying amount. The question calculated for you the carrying amount already. So carrying amount for each asset 25,000, 20,000, and 2,000. So if you total up all, you get a 47,000. All right, recoverable amount is 35,000. Okay, so we get the after minus, we get the impairment loss by 12,000. All right, so how do we allocate this to the rest of the asset, I mean to the each asset, this 12,000, how do we record, right? To goodwill, we have goodwill, to plan B, to plan A, plan A. Right. So basically, first thing first, what do we need to do is to eliminate the goodwill. What is goodwill? Goodwill is goodwill, right? The nama baik, right? Nama baik, right? So if there is impairment loss, definitely nama dia dah tak baik dah. To put it simple, nama dia dah tak baik dah. Therefore, because nama dia dah tak baik, we need to eliminate lah the nama baik, the value for the nama baik, the value for the goodwill. So that's why first thing first here is we eliminate the goodwill, straight away eliminate the goodwill, and the balance we get is 10,000. So now only 10,000 we need to allocate. So now we have two plant A and plant B. So only this 10,000 we allocate to plant A, we allocate to plant B based on their carrying amount. So carrying amount is 25,000 plant A, 20,000 plant B. Total up this both, we get 45,000. 45,000. So times with 10,000. So now we get for plant A, the impairment loss is 5,556. For plant B, it is 4,444. Total up is still 100,000 lah. So if you total up like this, you can get plant A carrying amount less with impairment loss. They get the recoverable amount by 19,444. Right. So while for plant B, okay, plant B, 20,000, less with the impairment loss, now we get 15,556. So if you total up this one, it should be tally with the recoverable amount by 35,000. It is lah. Goodwill is no more here. Goodwill is no more because goodwill is already eliminated. Okay, all right. Right. So another important part here.
Now let us look at an example.
What?
The impairment loss is Rm 12,000. The impairment loss first should be allocated to good loss be allocated to others on prorated basis.
Right. Sorry for the sound just now. Right. Never mind. Okay. So this is another important part of this chapter, which is a reversal of impairment loss. Okay, guys. What if there is a reversal? What if the first 2 years is increasing, but suddenly sorry, the first, what if at the beginning we have impairment loss, but then what if the next year or the next 2 years, the asset value is increasing back, normal, it come back to normal, all right? If indication of impairment is no longer exist, assess the recoverable amount. Or during the annual impairment test, recoverable amount now is more than RA. So there is no impairment loss, right? If recoverable amount then more than RA, no impairment loss or nothing to do, right? But impairment loss, if before this we do impairment loss, then something we should do, which is a reversal. Okay, impairment loss on goodwill should not be reversed. All right. So like the example just now, we have a goodwill. So if there is an impairment loss on goodwill, we eliminate goodwill just now. We cannot create that goodwill. Cannot. That one is cannot. All right. So journal entry for reversal is we eliminate our accumulated impairment loss. So we put back as a reversal of impairment loss or the asset revaluation reserve, right? Right. So for individual asset, okay, the carrying amount of asset after reversal of impairment loss should not be higher than the historical net book value had if there is no impairment. This is the situation. This is the step, right? Even though, okay, if there is no impairment loss, we need to also calculate to make sure there is no what the one that we reverse cannot be as higher as the uh reversal one. I mean, as higher as the amount without reversal. All right. So for CGU or cash generating unit, the reversal amount is to be allocated to asset other than goodwill. Goodwill cannot lie based on pro rata basis. Similar. All right. The carrying amount of the individual of asset in the CGU after reversal should not be higher than the lower of the recoverable amount, okay, or historical of net book value had that been no impairment loss. All right, so this is the for recoverable amount, right? For recoverable amount, all right, so the recoverable amount, okay, basically this is the step, right? The step for what the step for our impairment loss line, impairment loss step, right? So if there is impairment loss, okay, impairment loss, then we proceed, right? Proceed, okay. So we are going to have the carrying amount, okay, with impairment loss. Agree, the carrying amount with impairment loss. So carrying amount with impairment loss is mean that we minus with impairment loss lah. So we calculate the depreciation calculation based on this figure, right? So we get this figure. Okay, we get this figure. Let's say it is RM 1 million, Okay. Then when we try to do the impairment, the recoverable amount, let's say we get recoverable amount is RM 1.2 million, right? So can we just reverse it to 1.2 million? Cannot. Before we reverse to 1.2 million, we need to compare. Okay, we need to do carrying amount without impairment loss. Okay, we need to calculate carrying amount without impairment loss for this year. Okay, let's say this year happened in 2004. So we need to calculate in 2004. So we get the figure. Let's say after we calculate this, we get the figure. It is RM 1.1 million, right? RM 1.1 million. So reversal can only done, okay, if it's RA or historical of net book value. This one is historical of net book value lah. Historical without impairment loss, has been no impairment. All right. So now if you compare, RA is 1.2 million. Now carrying amount without impairment loss is 1.1 million. We are going to choose which one. Should not higher or we choose the lower, right? So we choose this one now. Okay. So now the reversal is basically based on 1.1 million. The reversal is based on 1.1 million. You see, carrying amount is 1 million. So we can reverse only until 1.1 million. So the reversal is only up to 0.1 million only. So if we do this, we debit accumulated impairment loss. We credit the uh, reversal. Reversal is actually the account gain, right? Gain maximum profit or loss, right? So we can only reverse up to 0.1 million only. Okay, understand this, right? We reverse only 0.1 million, all right? This is the extra that we should do lah. And this one we are going to do in the tutorial also, in the exercise also. So this is the disclosure. You see, income is a reversal. Reversal is part of income. Okay, this is the statement of financial position. All right, so this is the exercise. Okay, so this exercise is actually a continuity of the previous exercise. Okay, the continuity of the previous exercise. So the previous exercise, you can refer back to the video on the previous exercise, right? On the previous exercise, um, okay, I just continue from 2006 line for land. Okay, for land. Okay, 2006, what happened just now in 2006? There is an impairment loss, right? Because 2008 for land is 6 million, right? By now, in 2008, okay, land become 12 million. So RM 12 million. All right. While for building, okay, just now in 2006, it is RM 12 million, but now it become RM 14 million. Okay, here, 14 million. All right. So we know already that previously when we do land, okay, we go for land first. This is the information extract. Okay, now we do for land first. All right. So for land, again, I do for land first. Okay, for land, all right. Originally, in 2006, we have an impairment loss, am I right? So for land, we have accumulated impairment loss. Land, we have accumulated impairment loss by RM 4 million. Okay, you see, I put 4 million tau. I did not put 2 million. 2 million is actually the loss. The 2 million we cover using ARR, right? So 2 million is a loss. 2 million is covered using ARR, but accumulated is 4 million. The total is 4 million. So how much we can reverse for land? Okay, how much we can reverse for land? Okay, you see, land here. Okay, you see, land here. Okay, land here increased by 6 million. Right. So this is the new RA for the land. Okay. So the new RA for the land. Okay. RA for the land is RM 12 million. RA for the land is actually RM 4 million, RM 12 million, right? So if the carrying amount, okay, land is special because land don't have any depreciation, right? So we see if carrying amount without impairment loss is how much? We need to take the original carrying amount, right? So in 2006, it is 6 million. Okay. The original carrying amount is actually 10 million, right? Right. The original carrying amount is 10 million, right? In 2004, right? 10 million, right? So here, you see, here, what we can reverse is only up to the figure, right? So what we can reverse is up to only this figure. Right. So the reversal, even though they mentioned here 4 million, right? But the original amount is only 10 million, right? So the CA without the impairment loss is only 10 million. So we can reverse up to only the carrying amount only. So we can reverse up to only the, even though, wait, where's my pen? Okay. So we can reverse debit accumulated impairment loss, credit the reversal of impairment loss. So what we can reverse until CA only, which is CA until 2 million only, right? So we can reverse from 6 million to 10 million only. It is even though it is increased by 6 million, okay, even though it is increased by 6 million, we can increase it from 6 million. We are going to choose the lower. Which one is the lower? Carrying amount without impairment loss. So from 6 million, it can be increased until 10 million only. So the reversal only happened by 6 to 10 is 4 million, right? So only 4 million. All right. we cannot increase by 12 million. We cannot increase by 6 million because 6 million, it become 12 million, which is increase higher compared to the original amount, the CA without impairment loss. All right. If it is for building, okay, building, I use a different color. Okay, again, building from 12 million increase to 14 million, right? So for building, we know that our accumulated impairment loss, when I record here, building, our accumulated impairment loss is equal to how much? 5 million, right? Okay. So accumulated impairment loss is equal to RM 5 million and 52,632. All right. For building is different because we have to do the depreciation. All right. So this is basically the working line. As at 31st December 2008, for us to do a reversal, okay, reversal. So we need to calculate this one, right? Okay, so first we calculate CA carrying amount with impairment loss. Okay, carrying amount with the impairment loss, carrying amount with the impairment loss, we use this line, we use this 12 million, the one that we revised already. So 12 million less with 12 million divided by remaining useful life after 2 plus 2 years is 36 years. Why 2 plus 2 years? Because just now we start on 2004, 2002, right? 2002 and 2004, 2004 and 2006. So now it's already 4 years now, So we times with another 2 years because 2006 to 2008 is another 2 years. So now we get 11,333,333. Okay. So the RA given here in the question is actually 40 million. All right. So now our conclusion here, okay, no impairment loss. Okay. But because before this we have the impairment loss, but there is a reversal. Okay, this one is only happen only when if before this we have impairment loss. If before this we don't have impairment loss, then we just proceed. We just stop at no impairment loss. Okay. So how much? How do we calculate the reversal? Can we just simply reverse 11,333,333 to 14 million? Can we just increase this amount? Reverse is increase the amount. Increase the amount by this figure? No, we need to do the we need to calculate the CA with CA without impairment loss first. What is CA without impairment loss? CA if we don't have impairment loss. Before this, if we don't have impairment loss, you can refer to the previous answer, previous question, the previous just now, in the one that we just now, we have 18 million, right? 18 million less with 18 million divided by 38 years. Remember, 38 years, because we do a revaluation, right? 38 years times with 4 years. Now why it is 4 years? Because it is 2004 until 2006. Sorry, 2008. Because it is 2004 until 2008. We assume there is no depreciation. We assume there is no impairment loss, right? So from 2004 until 2008, this 4 years lah. So that's why we times with 4 years here, and we get the carrying amount by 16,105,263. Okay, now we have to choose. Okay, reversal. We have to choose either 14 million or using carrying amount without impairment loss. Okay, to make it a picture, CA with impairment loss, we can reverse to either RA, which is in this case, or CA without impairment loss. We are going to choose the lower of these two. So in this case, CA with impairment loss is 11,333,333. RA is 14 million. CA without impairment loss is 16,105,263. So if we have to choose the lower, we are going to choose the RA now, right? Different from line just now. Okay, so now we have to choose the RA. So we can reverse up to 14 million only. So from 11,303,333, we reverse ataupun we add the amount up until 14 million. How to get this amount? We just minus 14 million less with 11,333,333. So if we minus here, we get the RM reversal amount is RM 2,666,667. Now this is what we get, right? So how to do the reversal? Debit accumulated impairment loss, credit reversal of impairment loss. Again, right? 2,666,667 to 2,666,667. Right, yes. So basically, this is it, This is it. Right. So try to understand this first. Try to understand the flow, okay? And then do the tutorial. Right. So that's it. Thank you.